final 2 minutes of trading. Investors are closely watching the action here down in D.C. with the Senate passing the bipartisan infrastructure bill. Of course, questions now on what this means for the markets. We want to explore this with our panel. We have Courtney Dominguez, Payne Capital Management Senior Wealth Advisor, and Rhea, Senior Economist with Wilmington Trust. Courtney, first to you, just in terms of the market's perspective on all this. How is it looking at the developments down in D.C. and what this could mean for the market going forward?
You're clearly seeing a positive reaction in the markets right now because realistically, what an infrastructure bill is going to mean is additional spending into the economy. And just like the stimulus has helped the economy throughout the last year, that's more money that can be going into the economy and helping businesses just get through kind of the slump that they had been previously. So just generally speaking, I think the economy looks to be on good footing, and this is only going to be an added benefit on top of that. So I think we just really got to see where things lie. But initially, it's a very good thing for the markets.
All right, let's take a look at where things are here as we head into the closing bell. Again, the Dow up 153 points as it stands right now. S&P also holding on to gains up just around 0.1%. We saw the Dow and S&P both hitting an intraday record. We'll see where things close. The Nasdaq, though, under a bit of pressure as we see yield rise, keeping the gains in tech in check. Some of the Dow leaders today, you can see it on your screen. Caterpillar by far the winner today, up just around 2.5%. Dow Inc. and Walmart, as well as Walgreens, both up just over 2%. Goldman Sachs rounding out the top performers there. In terms of some of the sector action that we are seeing, gains being led by energy. Energy, one of the top performers today, up just around 1.8%. That's for the XLE. And remember, this has been an underperformer over the last couple of trading days.
All right, we have a closing bell, and here is where it looks like we are going to finally settle on this day that the Senate passes the infrastructure bill. 162 points will be the settle up on the Dow. It's going to end the day at 35,264. S&P 500 is going to settle up about 4.5 points. And NASDAQ, it's going to be down. It's going to be down about 72 points. Let's get back to our guests to help us figure out what's going to happen next. And I want to continue with this discussion. Courtney, I'm curious. When we talk about the momentum in the U.S. economy, despite Delta variant, COVID, all of it, we have all these reasons why things would slow down. And yet, really hasn't. We haven't seen a pullback that we were expecting this summer in the S&P 500. So is now the time to get into these markets before they become even more expensive?
Yeah, that's a great point. I mean, you did initially see some sort of a kickback back about a month ago when the Delta variant really started to pick up. There was a pullback in the markets because you're going to get some of that knee-jerk reaction. But ultimately, we are seeing as companies continue to report earnings, both companies and consumers are really a lot more resilient through this than anybody expected. And it's that positive economic data that's really outweighing any of the nervousness with the Delta variant or even things like inflation. So I think what you want to focus on is if the economic data continues to look positive, and I definitely have the mindset it will, the markets definitely still have some room to run here. But you do want to make sure you're just being cognizant of where in the markets things are cheap. Like, for example, all your big tech firms are getting a little bit lofty, whereas things like your values are still a lot cheaper than the market. So there's definitely some places to take advantage of here, even though the markets are near all-time highs.
Rhea, what's your reading on where things stand? Because Courtney just mentioned the threat of the Delta variant, although the market seems to be looking past that. When you take a look at some of our recent reports, it looks like it's getting a little bit more worrisome here, at least to the economic recovery. What's your take on this?
We also think that the Delta variant could slow the recovery, but we don't expect it to derail the recovery. So we may take a short-term pause in some of the momentum that we're seeing, but our base case is that we will continue to see a solid economic recovery. We look for 7.5% growth in 2021, but we do look for some deceleration going into next year, even if the economy continues its trajectory because of the rolling off of some of the fiscal stimulus that we had this year. So we do think that the recovery will continue, and we just think that there may be some slowing rather than a derailing right now.
Courtney, I'm taking a look at where some of the big banks settled today. I mean, JP Morgan Chase up 1%. You got Bank of America, Citi, Wells Fargo, TD. They're all up today. And you've pointed out that the largest banks, the loans to deposits at the 100 largest banks, just 75% below the 20-year median of 90%. Explain to me as an investor why I should consider that if I'm looking to go into the financials, the traditional banks.
Yeah, you got to look at some of just the basic financials with the financials, not to be too cliche there. But yeah, when you look at the loan to deposit, but also the amount of cash on hand at these banks, there's so much cash in the economy right now. Investors have about $2 trillion in cash right now. And all that is sitting in savings deposits. And banks are really at this point right now where they have a lot of cash in their banks. But one thing you want to look forward to is there is this thought that we're likely going to see inflation kick in here. And if you're of that mindset, which I am, that is actually a positive thing for banks, because if interest rates do eventually start to rise, that's going to help their net interest margins at the end of the day. So they're just in a good position now. They're much cheaper than the general economy. And if you're in the mindset that interest rates or inflation will kick in, that's only going to be a positive for them looking forward.
Rhea, what do you think all this means for portfolio positioning? Where are you seeing opportunities today?
Sure. Well, we also expect interest rates to rise going forward, given the solid economic outlook that we have. And we are overweight to equities and underweight to fixed income as a result, with a slight preference for value over growth. And we are overweight on international equities as well. So that's kind of where we see things. And so we do see scope for financials, industrials, materials, all of those sectors to do well in that type of environment. And in terms of banks, one of the things that's interesting is in the latest Fed survey of senior loan officers, that did show that there has been increased interest from corporations in looking into either existing credit lines or adding on to their credit lines. And so that does suggest that there may be increased loan demand going forward as well. So that we do think that that may support additional capital expenditures coming from these corporations as we look forward into the recovery, and that should be supportive of financials as well in our view.
Rhea, quick follow-up for you regarding infrastructure. How long is it going to take, if it passes, for that money to actually pick the sector, to get to the people who are actually going to put it to use?
We do think that with the infrastructure bill today, the developments that we saw in terms of the passage in the Senate was a positive move in the right direction. But we do think that there could still be some hiccups along the way and that it may not be an immediate realization. It does look like this may be moved into the House at the earliest towards the end of September, given Pelosi's comments suggesting that the House would only take up the bill once the Senate reconciliation bill, that $3.5 trillion, that looks more at human infrastructure, things like climate change, poverty, those types of issues, that once that is taken up, then only may they take up the bipartisan infrastructure bill that was passed today in the Senate. So it does look like there may be some delay in terms of when this actually, both of them get passed. It could be pushed out as far as the fourth quarter, especially because Congress also has to deal with raising the debt limit, something that kind of drop-dead deadline when the Treasury will be unable to meet its payment obligations. That may hit around October or November, according to CBO estimates right now. And so that's something we're watching for as well. But all of that suggests that these bills may not be passed, if they are able to be passed, until later in the fourth quarter.
We have COINBASE out with their earnings report. We want to get over to Jared Blickery for the numbers. Jared?
That's right. We got some really nice beats here. On the top line, second quarter revenue coming in at $2.23 billion, quite a bit higher than the estimate from the street at $1.85 billion. On the bottom line, their second quarter, well, that's the same number. So let's go to second quarter verified users. Those came in at 68 million. Estimate was for lower at 63.1 million. Also, a note from them, their Ethereum trading volume surpassed Bitcoin during the second quarter. I would say that is a milestone. Also, they recognized $737 million. That is a tax benefit due to their direct listing, which they did a few months ago on the NASDAQ. That was their first big direct listing over there. Also, second quarter retail monthly transaction users, 8.8 million. That is up 44% quarter over quarter. Pretty impressive when we saw that slowdown in cryptocurrencies. Not a slowdown, it was a crash. Let's be honest about that. Finally, I have a note about the regulatory situation here I got from deep within the report. Regulatory conversations are expanding, and we fully support smart regulations that support innovation. Recently, lawmakers and regulators at all levels, infrastructure bill today, have all increased their focus on the cryptocurrency economy across the board, stable coins, risk mitigation of crypto assets, tax reporting, like today, and securities registration, to name a few. However, we believe regulatory clarity remains slow to come. And so on that note, we're going to close here, but nice beats on most of their key metrics here for Coinbase.
All right, let's take this back to the panel. And Courtney, I wanted to ask you a question as, a senior wealth advisor. When we talk about cryptocurrencies, are your clients actually having discussions about adding, whether it's Bitcoin or Ethereum, to their portfolios? Are you getting more and more questions about this, and how are you counseling them?
Definitely getting more questions about it. At this point in time, it's really nothing that I'm using as part of my investment strategy, just because it is still so new and so volatile that it's something I can help clients with it. But just as part of our structure, we just see it as there's really not enough to go off of. And the volatility is just far too high right now. So I think this will continue. I don't think this is going away by any means. And I think that could continue to become more of a structure of part of your more traditional finance. But at this point in time, it's really nothing that I'm currently recommending to clients.
Courtney Dominguez, always great to speak with you of Payne Capital Management, and Rhea Thomas, a senior economist with Wilmington Trust. And thanks to you both for joining us today.